recently, though it was very late, but it was released with a lot of changes. Friends, in this particular presentation, within 1.5 hours, I will give an overview of the requirement of filing of the income tax return, the changes made in the income tax return, and also the applicability of the form. And during the period of discussion, also I'll highlight under what circumstances we are filing the return. We are not only filing the annual return, we are also filing the number of income tax returns, particularly reporting of the income, ITR 1 to ITR 7, under different sections. So many of the our professional friends or many of the associates of the view, they are in the mind that once you file the return, so your job is over. Actually, it is not that. There are number of circumstances. Even you file the return of income, the department also issued notices for filing for the return. Particularly, I'm talking about in case of reassessment and or recomputation of income as per the new provision. And before going further, let us also start with a very basic concept. So what is the return? Why we are going to file the income tax return? And when everything is available with the portal, when I'm making the payment of the tax and TDS returns has been filed. Friends, our Income Tax Act 1961, it is very old, and we are going to, it may be replaced with the new Income Tax Act. The income tax rules, number of notification has been issued by the Central Board of Direct Taxes, and similarly, number of circulars has been issued. In addition to that, number of judicial pronouncements also available at present because it was very old act starting from 1961. So now it is 2025. So around 85, 40 plus 25, around 65, 66 years of old. So now question is, your Income Tax Act contains the different provisions which are available, and we have to comply with that provisions. The rules is supplementary to the act. It make convenient for you to comply with the act. So one of the compliance is the filing of return and the income tax forms which has been notified every year, released every year by the department and synchronized with the portal and with that changes. So that is as per that is under the provisions of income tax rules. And your CBDT circulars clarified number of points related to the income tax returns or the provisions that are applicable for filing of the return. And in addition to that, the notification, CBDT circular, and in certain cases also we relied upon the judicial pronouncements. So it starts from, it does not mean that you paid your advance taxes, paid your taxes, but you have to report your income. And when I'm talking about 2024-25, as an assessee, everybody computed its income, that is estimation basis, and taken into consideration the deductions, exemptions available, and making the payment of the advance taxes in 4 installments or 4 quarters. In addition to, if there is a variation, they are also making the payment of self-assessment taxes. So whatever taxes has been paid within the 31st March, that means starting from 1st April to 2024 to 31st March 2025, all the taxes are treated as advance tax, even if the 4 due dates are there: 15th June, your 15th September, 15th December, and 15th March. But any payment made after 15th March, before 31st March, it is also treated as an advance tax. But after the 31st March, whatever tax you are going to make the payment till the filing return, it will be treated as your self-assessment tax. So all the taxes you paid in addition to TDS, DCS has been deducted. But you have to report your income by a prescribed format, and that prescribed format has been changed or notified every year with few changes, taking into account 2 aspects. So whatever form has been notified or released by the department, so that has taken into care two aspects. So one aspect is the changes made in the Finance Act or the subsequent changes made by way of any supplementary act. So that has been taken into consideration and accordingly form has been changed. In addition to that, government, you are knowing that after the digitization of the department portal and particularly as a part of easy doing business, government made a lot of changes or made a lot of not only provision changes but also procedural aspect of the changes, and at the same time number of mechanism has been devised, management information system has been devised. Particularly I'm talking getting the information from the different sources, and taking into account that sources, you might be knowing the specific financial transactions has been reported by the different authorities. So that has been taken into consideration. Government wanted to know whether a taxpayer is really complying to the provisions of the act. So that's why relying upon that data available or the specific financial transactions reported by, let's take one example, credit card, registering authority when the immovable property has been transferred, certain cash transaction deposited in your bank account. Particularly, I'm talking last few years, government is issuing number of notices, particularly in cash deposits. So by taking into account these aspects, so government also modified for reporting of additional information in the income tax forms. So in conclusion, I will say that your income tax return new forms which has been come or released by the department has taken into consideration the old form plus whatever changes has been made in the Finance Act that has been taken place in the appropriate place for reporting purpose, and not all the provision change. Whatever reporting is requirement is there. In addition to the certain new changes has been made to gather more information so that government is in a position to know whether the assessee is complying or not. So it starts from payment of advance taxes, it ends with the filing of the return, and subsequently it has been taken up for processing under 143(1) and subsequently for the assessment, reassessment, recomputation, budget assessment, etc. So this is the background of the requirement of changing. The second point is you should be very clear that there should be very clear understanding should be there. Whatever form has been devised, it is applicable for that particular year, but it can be utilized even after the end of the assessment year also. For example, I'm taking you just see this slide where there are different sections under which the as an assessee you are required to file the return of income. So the 139(1), which is the form we are discussing today, going to discuss in detail, that is the form which is modified and we are going to file it, use it for filing the regular return, means it is the original return we can say, and this is the return for a particular year, that 2024-25 financial year or previous year, we are going to submit it within the 2025-26. But again, the same form can be used for a return of a loss because there are certain after some time I will discuss return of the return of income at the form which is devised. It has to report both income and losses, because unless you report the loss you cannot carry forward it. And if you file the return not within the due date, but within the 31st December of the assessment year, then you have to go for filing the belated return. And if any return you filed but subsequently found omission, you can also utilize the revised return. But very important point I am talking about, suppose during one assessment year, you are not going to file the return of income, but subsequently the department issued the notice under 142(1), then if this 142(1) notice under section 142(1) notice which has been sent, it is for particular year. Suppose I am talking 2024-25, you are not because many people misuse the form. They have not they are not filing the return in the proper format. That's why you will find many cases it was objected. Particularly, I'm talking under 139.9 when the original return you filed, but it was not in the appropriate form. It is one of the reasons why it is treated as a defective return. Suppose I'm talking 2023-24. Take one example, and where you filed the return during the 2024-25 previous year, but you have not filed it. So department issued the notice. Now this year you are going to file a return related to the previous year. So previous year assessment year. So in that case, what will happen? You cannot use the new form. You have to use the old form. Similarly, I'm talking reassessment. Suppose the department has issued the notice for making the reassessment for the 2022 and 23. Let you take our 2022-23 assessment previous year. Then the notices has been issued. But which form you have to use? You cannot use this year notice has been issued, but you have to use the old form, not the new form, because the form, the ITR form is only for specific year. So whether you file it after the specified date or during the specified date, it does not matter, but it is only related to a specific year. So that's why under 119(2)(b, that is one of the section is available where let you take in many cases you have not claimed your refund. Many cases you have not claimed your tax benefits, but there is a due date is over. Portal is not allowing you to file the return because portal will be closed after the due date. And in that case, there is a provision you can make an application to the jurisdictional authority. Actually, there is a delegation of power depending upon the value of income, refund or income which the benefit which are there up to 1 crore, as I remember. That has been revised perhaps up to 3 crores. The principal commissioner is the jurisdictional principal commissioner is the authority who can allow you. So you will make an application. Let recently for the client, I made a one condonation application under 119(2)(b) because he has not claimed his tax benefit on the aerial salary, very huge tax, around 10-11 lakhs on individual tax is too much. But the return has been filed 89(1). 10E form has not been filed, so he has not claimed it. So what will happen? You cannot utilize the new form. You have to utilize the old form. So friends, keep in mind one point that the form which has been prescribed or the changes has been made, that is applicable for specified particular year, but it can be filed maybe in the subsequent year if the matter related to that particular year. So if it 2024-25 previous year or the form 2025-26 assessment year which we are going to discuss, so it is for specific year. But let after 2 years some 119(2)(b or let you take 148 notice has been issued for filing the your return because of recomputation notices has been issued under 147. So in that case you have to use the particular form. So this should be very clear. That's another very important point is why the government is very much anxious to make a lot of changes in the income tax return forms for two reasons. To capture more data because of digitization purpose, many data is available. They can compare it and subsequently found if the any income is escaped or not available, they can also go for the taking the action. And the second point is now this year one of very major changes we will discuss subsequently. But the one just to I highlight you that the PAN is very important. Without PAN, you are not going to file the return. Previously it was there. If you apply for the if you are applying for the Aadhaar, then you can go for. But now the Aadhaar without Aadhaar you cannot go for filing the return, and Aadhaar is linked with the PAN. So what happens if you see the statistics in India? This is the one of the statistics up to 2024, around 75 crores having the PAN. But unfortunately, this is the 8.09 crores taxpayers are there. And major taxpayer, 97% taxpayers are around related to the individuals. So this is the total return has been filed, and this year I think we are going to touch maybe more than 10 crores because of the number of and again I'm telling the return which we are going to file, it does not mean that they are paying the taxes. Many cases refunds are there. So with this background, let us also take a quick view on the few provisions, then we'll go for the discussion in the changes. 139.1 provides for filing of the return, and 139.1 provides a company or a firm can file the return whether the income is positive or negative, it does not matter. And the other than farm, the associate is a individual. You are a Hindu undivided family, a partnership, you are a association of persons, cooperative societies, body of individuals, political parties, trust, and many of the category of associate, those who are there. So if their income is exceeding the threshold limit, as well as if they are accessible under the Income Tax Act, but they are getting a lot of benefits, even if the taxable income is less, but they are required to file the return of income. These are the actually sections, subsections which taken into consideration for filing under 139.1. The company firm is required to submit a return regardless of the loss, and it is benefit of the company and the partnership firm. And you will find the loss is appropriately also placed in the different schedules of the income tax return forms. And 139.1b is for individual HUFA, and other than the individual HUFA, particularly who is required to submit the return if the exceed its threshold limit, and generally those are getting the tax benefits even if the taxability is not there, but they are taking the deduction under 10A, 10B, 80C to 80U old regime, so they are also required to file. These are the very important points, because why I am highlighting it, because these related changes also made in the income tax return forms. These 5 category of assessee, you can note down that these are the other than company, and these assessees are getting the income. Particularly, I'm talking 139 4A made mandatory for the trust or charitable institutes, or which has been formed for the trust which has been formed for the charitable or for religious purpose, even if they do not have the tax, because they are coming under exemption. Section 11, 12, and 13. 13 is the political party. So 11, 12 provide certain provisions where the exemptions are available to them, and there is certain other conditions are there. So in that case, even if it is they are not touching the exemption limit, but they are required to file the return of income. The reasoning government wanted to know whether the deductions or exemptions which are available to the trust is as per the provisions of law or not. Similarly, 139.4b is the political party. They are required to file the return of income. 139.4 it is for the assessee who qualified to claim exemption under section 10 and 23. There are a number of bodies are there. Those who are filing those who are getting exemption under section 10, and let you take your gratuity trust, your PF trust, like this. Many trusts are there, investment trust, your venture capital fund, like this. So they can eligible, and 139.4D, which is the most important, that is the university, college, and other institutions, they are required to file the return, and the particularly investment fund or the business trust, they are required to file it under 139.4E4F, because you have to choose the form accordingly. It has been devised. In addition to, while we go for quickly for 2 points, even if you do not have the income, but still you are going to file the return of income, and you have to accordingly choose appropriately the return point. Important point is, unless you have some knowledge about the provisions related to the filing of return, you cannot go for choosing the return form. So return form has been devised. Return item 1 to item 7 has been devised for different category of assessee, and even also category of assessee for different reporting of different incomes also. We'll after some time we'll discuss. So even if a person is not having the income, but he holds an beneficial, he is the beneficial owner, or otherwise he holds certain assets or financial interest located outside India, but do not have the income, but still then he has to file the return of income. If he is signing authority to any bank account outside India, even if he is not derived in income, but still they are required to file the return of income. and is a beneficiary of any assets, including financial interest located outside India, they are also required to file the return of income. Actually, this was introduced subsequently after the Vodafone case, where the government lost the case in the Supreme Court because the buyer seller both are outside India but asset in India. The asset belongs to the Vodafone in India, in Indian company, but the buyer, the seller of the asset are outside India, so government imposed tax. But government, the matter gone up to the Supreme Court. Supreme Court of the view that this is not taxable because there was no provision. So Section 9 was changed drastically, and subsequently this was also introduced to capture the income and to know whether it is taxable or not. So these are the mandatory filing of the return. These are 1023 I was talking about, 10 Section 10. Few of the provisions of Section 10 you see, there is association of institutions, fund of institution, trust, university, hospitals, mutual fund, circulation fund. So because they have to appropriately choose the return formats. So in addition to that, the three items you will see, government is going to abolish it in the new income tax bill. So where even if you do not have the income, but you are making the payment of electricity bill exceeding 1 lakh, and you are providing money to somebody for the foreign travel, you yourself be traveling or somebody for which you are providing money exceeding 2 lakhs, and that is also there. Similarly, any cash deposit made 1 crore or more. So in that case, they are also required to report it. So these are, in addition to that, they are going to provide many more conditions for which return can be filed. Friends, quickly we go which form you have to choose, because when I'm talking about ITR form changes, but when changes, form name has not been changed. ITR 1, 2, 3, 4, 5, 6, 7, that has not been changed. The applicability of form, for me, which form I have to use, whether I use ITR 1 or 2 or 3 or 4, and that depends upon the nature of income which I am receiving. And unless you are aware about that, you cannot go for the changes which made, around 20 changes has been made in a broad sense, but a small changes we are not going to discuss. But you should know which form one has to use under what circumstances. ITR 1 generally it will be is a source form. It was not originally was in the beginning. So subsequently it was introduced. It was introduced with the persons having the salary or pension and having one house, not more than a house, not having the brought forward losses or carry forward of losses, not having the lottery income or the income from the horse races. Because if that is there, you cannot go for filing ITR 1. You have to go for filing the ITR 2. So in that case, the person concerned only, because there is a restriction. I have only salary income, or I have only one house income, or I have only pension income, and I have bank deposits not exceeding certain amount. So then I have to go for. So if I am a director, so I cannot go for filing the ITR 1. If I have a lottery income, I cannot go for filing 1. So like this, the restrictions, I have a table. In that table, the income wise, I have just made placed to have a understand category wise. So if he is having salary income, he is having capital gain, if having business income, so which form has to be used for the purpose. So accordingly, that will be discussed. But prior to that, I have some idea about this one. And I tell, you see what happens. One section is there, 190 for N, and or that is the case where there is a withdrawal, cash withdrawal. So certain TDS is there. Actually, it is not an income, but for the control purpose, government introduced this section after the demonetization of the government found a lot of cash has been deposited with the RBI. So in that case, this is so you cannot go for filing ITR 1 if there is a TDS has been made under 194N. ITR 2 is applicable to HUF and individual. ITR 1 also applicable to ordinary resident individual, not HUF. And here the individual can also, so individual have the option, actually 4 options. So you can use 1, you can use 2, you can use 3, or you can use 4. So if I have more than one house, I have salary, I have pension, I have more than one house, and I have a carry forward of losses, and I have a lottery income. So all these cases, I can go for filing the ITR 2. And ITR 3 is applicable to individual HUF, those who are having business income or professional income. ITR 4 is a SUGAM. You know that there is a presumptive tax was applicable under different provisions, 44AD, ADA, and 44E. As a professional, you are also adopting ITR 4 for the payment where a percentage will be taken. ADA is for the professionals, advocates, chartered accountant, cost accountants, company secretaries, or engineers, consultants, etc. Those are having professional qualification. 50% blind will be taken as income. So they can use it. Similarly, for the small business concerns, civil contractors, etc., where a percentage of the total receipt taken as income. So they have to adopt criteria 4. But it is only applicable to individual HUF and a partnership firm. No LLP, no company, no cooperative society. So that has to be seen, and they can use to similarly 44A is the vehicle owners or truck owners, we can say. Those are having the fleet of trucks not exceeding 10. So in that case, they can utilize. So these are the criteria has been prescribed for the use of the form. Item 5 is used for LLP, AOP, association of person, body of individual, and similarly, but it is not applicable to the assessee. Those are covered on 139(4)(a). Already I told you 139(4)(a), 4(b), 4(c), and 4(d). Political parties, trust, hospitals, institutions. Already I have given a brief. So they are not going to use only the LLP, limited liability partnership firm, association of person, and body of individuals. They are going to use it. Item 6 is applicable for the company. Actually, the company which is not claiming the exemption under Section 11. Many companies are there, non-profit organizations. They are exempted under Section 11. So in that case, they will not use ITAS 6. So they cannot utilize ITAS 6. So that's why it is only for the company. Those who are not having exemption. ITAS 7 is for the category, special category of assessee. Already I have given a list to you: 139, 4A, 4B, 4C, 4D. So that they have done. And item B is the acknowledgement. So whatever return you filed, so it is a receipt that government has received it. So these are the cases. And in broadly, just quickly I'll go. Only these three types of income will be reported. So income from salary, income from house property. Only loss. If there is a house property loss, you are carry forward, then you cannot go for. Already I've told you that I'm not going to take it. And another very important point is in many cases, you might be knowing section 60 to section 64, when that is known as clubbing of income. And in case where the income of another person, like a spouse, minor child, or any other member of the family is clubbed with the income of the taxpayer, this return form can be used only when such income falls in any of the above category. But if the category of income of the spouse, or whether clubbing is a mandatory provision, if he the certain conditions satisfied, you transfer the asset without transfer. So you transfer the income without transferring the asset. So it will be clubbed. Minor child income will be clubbed. If it is not his own income or own skill income, then that will be taxable in other hand. You have to act as a guardian, or we can say the tax. You will pay the tax, but the return will be filed in his or her name. So that has to be taken into consideration. And these are very important point. Item 1 cannot be used for total income exceeding 50 lakhs. The points which I discuss, I will not repeat here. The who has income for more than one house property, who held unlisted equity shares any time during the previous year. Mark the word, even one day you are holding, cannot go for filing item 1. Who has held unlisted, who can have deduction under 80 QQB or 80 RRB. These are the royalty and patent cases. Certain deductions are available under old regime. And similarly, 10AA, Part C is the export profit, or loss brought forward, carry forward. And very important is the income should not exceed 50 lakhs. And similarly, who want to claim relief under 1991, that is the double taxation avoidance agreement. If any tax has been paid in the foreign country, there is a specific provision where whatever tax you paid, a certain basis of computation, that tax credit you will get it available here, and the balance only you have to make the payment. So if that is the case, even if it is less than 50 lakhs of your income, but you cannot go for filing the ITR 1. And similarly, if you are having deduction under section 57, when you are computing income from other sources, you have to also take deduction under section 57, then balance amount is taxable. In other sources also there is a provision. But if you are claiming that, then item 1 is not applicable. Financial interest in equity, already we discussed, located outside India, it is not applicable. Signing up any account, you are the signing person, but in that case, item 1 is not applicable. And you have a business professional income, you have a capital gain, you have income other sources, you have income exceeding 10 lakhs in the dividend income, you have unexplained income, and you have agriculture income exceeding 5,000, and income tax from any other source outside India. All these cases, item 1 is not applicable. Two already we discussed. Two is not applicable in case of individual HUFA who is having business profession. If a business profession is there, then they have to go for the ITR 3. And similarly, if any other club income is going to be clubbed, so they have the income other than this. If they have business income or professional income, etc., that cannot be covered under ITR 2 also. And similarly, ITR 3, it's a business profession, you have to utilize it. ITR 4, already we discussed. Winning, even ITR 4, income from other sources, winning from lottery, you can, so winning from lottery, etc., ITR 2 can be utilized, ITR 3 can be utilized, ITR 4 can be utilized. So there is no restriction on that. And similarly, if you go for the ITR 4, ITR 4 is a very small. It is comparatively, if you compare it with the ITR 2, particularly I'm talking about compare with the ITR 3 and other ITR, it is very, the number of pages are less, reporting tables are less also. So it is only restriction is if it is a non-resident, you are a non-resident or ordinary resident, then you cannot utilize it. If a director of company, you cannot utilize it. If total income exceeding 50 lakhs, you cannot utilize it. And if more than one house property, then you cannot utilize it. And who had held unlisted equity shares at any time during the period. And said just ITR 1, the restriction. Mostly this form has been used for the presumptive income. So assessee, those who are having the presumptive income, they can utilize it. They can use this form for the purpose of their tax purpose. And non-applicable, again, capital gain income from other sources, but these things we will not discuss. These also not required. These already repeat part. And before going forward for the further discussion, just I will tell you the form which has been prescribed in the income tax rules, it has been prescribed and the changes has been made. And while we are going to file the return, it is foremost duty, the tables which has been devised in the return of income and modified from time to time, it is basically divided into 3 parts, we can say. In my view, one is the basic information. So information about the taxpayer, its bank account to audit details, return filing details, residence address, and original return or it is revised return or the return filed with reference to notice issued 148 or it is related to the 119 2B, the condonation of delay. After that, if he permitted to file the return. And in addition to that, your regime And thanks for your kind information, whatever item form has been revised. So this revised form is the new tax regime is the default regime. So it is you have to exercise the option to file your return under the old tax regime. So last year also it was default tax regime 2024, 23, 24, but 2022 previously it was new. The new tax was not the default, old tax was the default. So now the very important every ITR firm has taken care of exercising the option. So some more additional points on this exercising option we will discuss in the return formats. And next point is you have to first determine which category your income is falling. That is very important. The reason is the each category of income having its own deduction and exemptions. While I am going for the computation, I have to first determine what is the income related to my salary, what is house property, what is my business or profession, what is my capital gain, again long-term, short-term capital gain. Even also in the business profession, you have to go for calculating speculative income, non-speculative income. In the capital gain also, even also you are calculating long-term, short-term. Again also you are required to calculate whether it is because of the short-term, long-term capital gain is related to the assets, land, building, or the intangible assets, or it is related to share and securities, or the debentures or bonds, because the taxability also accordingly applicable to different types of capital gains. So that is the very important point for everybody while they choosing for going forward for filing the return in the return form. And again, I'm telling number of changes has been made in the ITR 1 to 7, which we discussed related to the capital gain. Drastically changes has been made in the most of the tables. And the next point is after if you go step by first I have to decide whether I am the resident non-resident. Then I have to decide which source of income is there. Is the salary income, house property, business person, capital gain, other sources, and after that any clubbing of income is there. Then you have to see whether deduction is applicable to you or not. If a new tax regime, no deduction is applicable except one or two items under chapter 6A, because 72, more than 72 deductions and exemptions has been become non-eligible in case of in case of assessee who is not going for the filing the return by exercising old option. So it is again I'm telling this is not part of the discussion today, but for the small information, I will tell you it is you have to make a tax planning whether you go for a new or old tax regime for filing of the tax return. So after that you have to find out gross total income, then you have to go for the computation of total income, then tax payable, applicability tax is applicable. But another point is when these are the relevant sections, particularly when I'm going for the computation, I have to also see that no income is going to be underreported or misreported. That's just you see. Uh, Previously, the section was related to the concealment of income, and if you have concealed the income was the penalty was applicable under 271C, but that has been omitted, and in their place, the 270A was introduced by which misreporting and underreporting is taxable. Misreporting is where the 200% is the penalty. You have to pay the tax, and the 200% is the penalty. And where the underreporting is the 50% is the penalty. But another point is very important, whether a misreporting or underreporting is a concealment of income or not. So that again, if it is coming under the category of a concealment of income, means it falling under section 68, 69A, 69, 69, 69A, 69B, 69C, and 69D. Just to see, this is the undisclosed income, what we can say, it is nothing but a concealed income. So in that case, it will be category, you will pay 60% of the rate of tax, 60% tax rate, and plus your 25% is the surcharge, and again your health and education says 4%. Around it is coming 70, 80 or 79% for the purpose. So cash credit that is 60, 80, unexplained investments, unexplained money, unexplained any investment not disclosed, unexplained expenditure, and amount which you borrowed through hundi and utilized. So these cases you can see for. So this is the overview of the sections which has been taken care in the ITR forms. So in the appropriate head, just to see, salary is having only 3 heads. Income from house property starts to 22, 26. Business profession start 28 to 44 AE. Capital gain section 45 to 55A. Others is 56, 57, 58, and 59. And again, I told clubbing of income also taken into care section 60 to 64, and your setup and carry forward of losses also taken care in the section 70 to 72. So with a lot of subsections. So after taking into account these facts, then you have to think of going for the filing. These are the deductions available old regime, and as after in the new regime, most of the deductions are not available. So now coming to the our discussion that like other years, if you compare to the last year, this year the release of ITR form is after 31st March. So it is delayed with minimum 39 days. So CBDT released ITR form 2025-26, ITR 1 to 7 with modification, and between 29th April to 11th May 2025. So if you compare to last year, it is around 39 days later. And already the reason I told what are the changes made. First is the changes is taken care of the Finance Act, last year Finance Act. So last year Finance Act is the Finance Act 2024. So whatever changes have been made, and if there is a requirement of reporting, then that has been taken care in the this ITR 1 to 7. And in addition to that, government for capturing more information or the data for the purpose of their risk strategy management, which is generally CBDT studied and accordingly given instruction for going for the review of the returns and assessment purpose. So that is also one of the reasons. So they take a very long time. And most of the cases, if you see last past history, so it is released before the 31st March, and many cases we have seen in the January, February also it was released. And the next one is the Excel utility of ITR 1 and ITR 4 also released. That is released on May 30th, just 2 days before it was released, 2-3 days before it was released. And Excel form is very convenient for making the offline return, then you upload it. And similarly, CBDT, since the return is delayed, CBDT also extended the due date of filing return from 31st July to 15 September 2025. It has few advantages, few disadvantages. The advantages is the changes which they proposed. Accordingly, it has to be taken care in the portal, because if according the configuration cannot not be changed or updated, then it is not practically possible. You might have seen the return schema has been updated. So that means the basic portal has been come out with the different difficulties in the portal and made changes from time to time. Even also certain circumstances we found that today I filed the return by downloading one return form, but after 10 days, if I have that return, I'm utilizing, not online, I'm talking offline, and then you are uploading. So in that case also sometimes return may not work. The reason is by that time the basic concept basis on which the return was formulated and it was configured has been changed. So that's a that is also one has to take care. And it actually we have seen it during the period of starting introduction of the new form and ending with the date of filing return, 3-4 times it is updated. So every year it is updated and the updated form is given. So one has to use the updated form. And the second point is why the government thought to extend it. The reason is many of the TDS returns, TCS returns has been filed where the TDS certificates and credits are available only after the 15th June. So there's a very short time to get it. So that's a there may be more other reason why the government thought to extend, but um, the industry, whatever the news in the industry is that since the reported form has come out later, so that's why the government extended the due date. But one thing, government has to pay more interest on the refunds, and at the same time, those who are paying the self-assessment tax, not paid full tax, they are also pay more tax. If we instead of filing 31st July, if I am going to file on 15th September, and I have to pay some money, then my interest also I have to pay up to that date. So that's why it does not mean that government extended is we should wait. Once the form is available, we can go for forward and file the return instead of waiting up to the 30th September. Friends, however, just look at the come. This is very important actually. I have categorized it income wise. So you can compare. Item 1, 2, 3, 4 is applicable already applicable to I have discussed individual HUF, partnership firm, association of person, body of individuals, etc. And particularly LLP is not covered under here. So you just see who are going to report, who can utilize it. Now, salary income will be reported in 4 formats. Your income from salary pension, not ordinarily resident and non-resident. If I am getting salary resident, then it can be reported all places. If I am non-resident, then it will be only 2 and 3 will be used to. An individual who is a director of the company. So it is not the income. My income is less than 50. I can use item 1. But my income, I'm a salary employee, but I'm also a director. So in that case, director means not the designation of a director. I'm talking the director of the board or director of the company. So in that case, item 2 and 3 will be utilized. If the payment of the tax in ESOP allotted by an eligible startup, then in that case, the 2 and 3 will be utilized. So this is the salary income. If you see few of the salary income cases, it is 2 and 3. But all other cases, 3 actually it is used for the business. But that too, if a business income is there, I have an individual also having salary income, then also I can go for the item 3. If I do not have business income, but I have a salary income, but other conditions satisfied, then I can go for 2. So if already the conditions already discussed, but salary wise I have given a comparative sheet, then you come to the house property. 4 cases house property can be reported. But if the brought forward losses is there, then only item 2 and 3 will be utilized. If income loss from more than one house, then 2, 3 will be utilized. So 1 and 4 cannot be utilized. Then you come to the Then you come to the income from business. So if you have income from business, you have to go for item 3. If you have presumptive income, already I told you, 44AD civil contract, small shops or small business associates, those who are having going for the presumptive payment of certain percentage, they will pay as treated as income and pay the taxation. So in that case, this the form can be with only 4 form can be used. So 4 is only for the presumptive purpose, and income from presumptive business covered under 44AD for not ordinary resident. Again, I'm telling because resident and ordinary resident and non-resident, the 3 distinctions always made. So if you're non-resident, then they have to utilize it. They will not utilize it. ITR 4, they have to go for ITR 3. In the ITR 3 also there is a table of presumptive tax is also there. So, let I have 2 business. One is I am professional covered under 44 ADA. but I have some other business also. Then I can utilize ITR 3 also. There is no issue at all. There is also present table is there. But if I have only the income from profession that you take it, and then you can utilize the ITR 4. Interest, salary, bonus, profit by the partner. If the partner is receiving any salary, profit or bonus, then it will go for the ITR 3. And then ITR 1, 2, 3, 4. That is the very important point. This point, there is a drastic changes has been made. Long-term capital gains taxable under 112A. 112A is related to the equity shares, equity-oriented mutual fund, and units of business trust. So in that case, up to 1.1 lakhs, earlier it was exempted, now it is 1.25 lakhs exemption is there. So after that, if any tax payable is there, then sorry, not exceeding means even if exemption you claim, but you have to report. And in that case, you have to utilize item 1, 2, 3, 4. All the 4 cases you can go for. But if the long-term capital gain exceeding 1.25 under 112, 112 is the already I told specific assets, then you have to go for 2, 3. If you go for 112 the other assets, other means land, building, etc. So in that case, you can have to use only 2 and 3. And unlisted equity shares you have any time, then you have to use for the 2 and 3. And capital gain loss on sale of investment or property, then you have to go for the 2 and 3. So these are the forms that you use. Then you will come to the other sources. Family pension, 4 forms can be used. Family pension, ordinary resident. So ordinary resident means only form 2 and 3, and non-resident, all these cases, 2 forms only 2 and 3 is used. Income from other sources other than income chargeable to tax at special rate. Special rate means where your normal rate or slab rate is not applicable. Special rate, capital gain is a special rate. So in that case, 4 forms can be utilized. In the table, you might have seen the computation of tax table. So there is also normal income and special rate of income. So there is a 2 bifurcation has been given of the total taxable income where you can utilize it. And a dividend income exceeding 10 lakhs. Actually, in that case, you have to see that it is an amendment has been made. So as per the amendment, 10% of the 10% on dividend income tax over 10 lakhs for the individual HUF and farm in India. This has been inserted on certain dividend received from domestic companies. Foreign company is not covered here. Unexplained income, if you have, then you can go for 2 and 3. Person claiming deduction under section 57, already I told you, this is 2 and 3. Then your deduction 80 QQB and RRB, it is say 2 and 3. And export profit, it is only 3. And then your agriculture income exceeding 5,000 to 3. Up to income 50 lakhs to 3. And portfolio carry forward losses 2, 3. And individual in respect of a TDS, actually where this is a particular provision. If an individual is taxable in respect of an income, but TDS in respect of such income has been deducted in the hands of any other person. So in that case, they have to go for ITR 2 and 3. Friends, one of the important points just I'm telling, as I remember, there is also amendment made where you can also transfer your TDS for payment of the tax to others also. Actually, my TDS I can transfer to others. One can also utilize that TDS and for the against their tax liability. So that is the amendment earlier made, and the table also provided for that. And if an individual is taxable in respect of and then the 1990, 98, 91, these ITR 2 and 3 is equal to file difference. Just I wanted to clarify one point. Double taxation avoidance is we have India is having with many countries, around 150 countries, where it is the tax is deducted in the source country or generally it is source country. So if X is a resident but having some non-resident income, and let in USA he is having property, tax has been deducted there. So that tax credit he will get here. So in that case, so if that is there, then the formula of computation, there is a method of computation where the average tax has been taken into account, and whatever tax you paid, it may not be entirely deductible, but by taking into account the average tax, certain amount will be taken as a deduction in India because you paid outside India. So similarly, 90A and 90A, 90, that is unilateral agreement. So sometimes we do not have the double taxation avoidance agreement, but to encourage the people to have the foreign currency income and bring to India. So in that case also certain tax benefits also given. So where any income repatriated to India and it will be treated as income, particularly in the case of a resident. So in that case, they can also whatever tax paid outside India can also get the credit. So these three sections are applicable to ITR 2 and 3. You can go through. And ITR, uh, these are also few points already I told you. Cash deposits and three cash deposit to 1 crore, 2 lakhs foreign travel, 1 lakh payment of electricity bill. Already I discussed with you. So this is categorically mentioned. Person has a turnover from business exceeding 60 lakhs, then one can go for utilizing either 3 or 4. And a person has a gross receipts from profession exceeding 10 lakhs, that is also item 3 and 4. Aggregate amount of TDS and TCS is 25,000, 50,000 in case of senior citizen or more, then they also utilize 4 forms. If my actually I am covered under this one, but there may be some other income that I can also cover under. You have to see by taking into account which form I have to take, so that all the income will be reported. So, but these are the specific table has been given. I will share this slide to all of you. And ITR 4, 5, 6, 7 already I discussed with you which is applicable. LLP and those who are going for sorry farm excluding the LLP and presumptive taxation scheme, those are adopting, so they can go for 4. Farm or including LLP can utilize 5. Association person utilize 5. Body of individual 5. Local authority 5. And companies other than company claiming exemption 6. If they are claiming exemption, they can utilize the form 7. And the persons excluding foreign companies, particularly already we discussed, that is also they can utilize 7. And a business trust and investment trust, they will utilize ITR 5. So these are the category are there. Now come to the question, what are the specific changes in addition to the applicability of the form? What are the specific changes has been taken place in the return formats? One is the turnover threshold limit turnover for reporting in the 44 AD, and it was kept as 3 crores of the business case and 75 lakhs in the case of 44 ADA. If I have threshold limit more than, I am a professional, my threshold limit is more than 75 lakhs, then I cannot utilize presumptive tax in the ITR form, or cannot be utilized. And there is a condition is there. This is applicable in case 90% or more of the transactions are digital payments. So to encourage the digital payments, this 50 lakhs has increased to 75 lakhs, and 1 crore has increased to 3 crores. So 1 or 2 crores, just to check up it. As I remember, it is 1 crore, but still you check up whether 2 crores increased to 3 crores. And a wider scope in the ITR 1, small investor with a limited long-term capital gain. Actually, this point I have not told in the previous any slide. So that's why this time the scope has been made for report of a small long-term capital gain in the ITR 1. Mandatory tax regime. That is very important point. I wanted to talk to you in particular point. Friends, you see, now this year is the default regime is the new tax regime. And if a default tax is new tax regime, if you do not have the income from business, so in that case, you can go for opting of the old tax regime, and every year you can go for the opting the old tax or new tax. Accordingly, you go for filing the return. But if you have a business income, then you are opting for the old tax regime in the lifetime only be once. And if it is only once, then second time, suppose I am coming under new tax regime, but I have business income, then I can opt out to the old tax regime, but subsequently only once I will come opt out. Second time I cannot opt out. I cannot come and again go. But in case of individual, let me case in case of HUF, and those who are not having the business income, this year I have adopted a new tax regime. Next year I can adopt a old tax regime. Next year I can adopt a new tax, depending upon my tax benefits. I will compute and which is beneficial I will go for. And you have to exercise the option. No specific form is there. Only you have to tick in the prescribed ideal form. But in case of business associate, so they can opt out only once, they cannot go for, and specific circumstances they can go for filing the 10IA form for the purpose of opting out. And friends, I have one experience I wanted to tell you. Since the income tax formats are having the provision, you just see it when you are going for opting out. You have to exercise your option and file the prescribed format. Particularly, I'm talking about professional or business associate. There's a three are there. This option which you exercised is valid up to the due date of filing return, or it is valid even also after the due date, and you cannot come back. Once you exercise, you cannot come back. But if it is you are taking that validity up to, then after that you can also go for to the new regime because you have not filed the return. I'm giving the special example. Actually, one of the occasion I come across. One of my brother actually is a doctor and he is having the professional income. And in the last day of the filing return, his son came to me with all the detailed calculation, and he told that just show me, and and he wanted that I will show him and he will file the return. So it is the last date. I was also very worried in the morning. So when we have seen by putting we exercise the option old tax regime, and when we exercise the option old tax regime by filing the specified format. And I remember it is 30th or 31st July, last date or last but one day. And when it is calculated tax, actually it was filed wrongly. But when we found that after filling up the form, we found that tax is more than what we computed, then it has come to the mind that perhaps we have exercised the option, and that exercise option wrongly exercised. But apparently it cannot come back. Then what do you have to do? So then we thought that better to go for presumptive taxation. But going on for the presumptive taxation, the tax was also more. But luckily, what happens? It is no here it is mentioned. We consulted many of our friends, but who could not guide us. So it has come to our mind that okay, let us try it. Whether I exercise the option valid up to due date of filing return, or even also it is valid after due date of filing return, because I am going to file. I have not filed the return within the due date. So why we have not filed within the due date? Now we decided that we will go for exercising an audit, tax audit, and file the return by 31st of October, so that the income will be reduced, tax will be reduced. So instead of going for the filing the return in the new tax regime, which could not be possible, then we found it has accepted. So why it has accepted? Because the option was exercised when the form was uploaded. The option was exercised that this will be valid up to the date of due date of filing return. Since we could not file the return within the due date, then it was become invalid. That's why again the new tax regime has been accepted, but with a penalty of 5,000 rupees because we filed the return a belated return. So, but my point of talking to you is when you are going for exercising as a business assessee, you should be very careful because once you have gone, you cannot come back subsequently. And next point is a loss point reduction. Actually, there is a those who are adopting the old tax method regime, and there is a deduction starts from ATC to ATU. So there is a clause wise, the section wise it has to be taken. The drop down list has been made so that actually previously what happened, you have to tick and go. Now it is a drop down. So accordingly, you can go for filing. 89 on taxpayer claiming relief under 89A for the income from foreign retirement fund will benefit from streamlining the reporting process from the process. So there is a simplified relief for foreign retirement account. So there is a reporting has been made. Mandatory reporting of active bank account and non-dormant bank account held in India during the financial must be reported. Actually, earlier it was not there. Only active bank account you have to. It was there that only any day it is inactive. But a bank account is there, but it was not active throughout the year. It was not reported. Now you are going to report it. And more taxpayers can now use ITAR 1. The reason is the short-term capital gain to some extent has been allowed. Sorry, long-term capital gain in certain cases has been allowed to be filed. Then Aadhaar enrollment is very important. Friends, previously what happens, if anybody do not have the Aadhaar or if anybody is not linked the Aadhaar, so in that case, or new Aadhaar alert, those who are applied for the Aadhaar, so in that case, the Aadhaar enrollment number they are putting. So instead of Aadhaar number. But now what happens, there is no requirement of putting because it is not allowed. So if you have a Aadhaar, then you put and go for filing. If you do not Aadhaar, but you applied for the Aadhaar, then you cannot go for filing. So once you are getting the Aadhaar, then you have to make the filing. So Aadhaar became compulsory for the purpose. So taxpayers are now required to provide their Aadhaar number, the Aadhaar number of partners, members, settlers, trustees, beneficiaries, executors, as the case may be when filing the return, aligning with the new provisions of section 139AA. Previously, what happens, it is restricting the use of the Aadhaar enrollment ID in place of Aadhaar number because the amendment has been made in the Finance Act 2024. So Aadhaar enrollment number is not allowed. Then the change in a disclosure on opting out the new tax regime in the section 115 PSC. Friends, 2024-25 assessment year, I am talking about the previous year, simply asked whether the assessee had exercised the option to opt out of the new tax regime under section 115 BSC 6 and required the date and acknowledgement number of a 10IA if applicable. Actually, 10IA applicable only case of business associate. So that's why it asked for the purpose. And the required date. But now what happens? More details are required. So what are the more details? Now it is asking you in the past, any 10IA you have filed and the assessee wants to continue opting out of the new tax regime in the current year. So past period data has been asked to be reported. Reporting of income declared under presumptive tax under 44 BBC, actually 44 BB, 44 B, 44 BB and 44 BBC. So these are the special sections. And you might have seen in the Finance Act 2024, a new section was introduced, that is 44 BBC. And this 44 BBC provides that the assessee, those who are engaged in the cruise shipping industry in India, make an attractive global cruise tourism destination. In that case, that assessee, whatever amount they received, it's 20% will be treated as a presumptive income, and accordingly one has to go for paying the tax. But in the that has been amended because it's a new section, so accordingly the format has been amended. So general information is amended. In addition to also reporting of business profit, so table has been amended, and accordingly. But another very important point is whether it is covered under tax audit or not, that has not been specified. So but those cases where the audit is not applicable. Actually, the three sections are there, as I remember. One is a 44BB, and which is a new section, and there is a 44B, there is shipping company. Actually, in case of shipping company, those who are having business in India, they have two types of computation. One is a presumptive tax on the 44B, or the another is instead of a presumptive taxes, they can compute their income under 172. A special provision is there. And similarly, in case of 44BBA, there is a aircraft. So I think it is 5% for us of the total receipt, 5 or 10% of total receipt taken as the income. So similarly, BBC talks about the 20% of the total receipt treated as receive or receivable treated as income, which has been taken into calculation. And all these cases, tax audit is not required. Actually, 44AD talks about that I am professional, my income is exceeding 50 lakhs. I have to adopt the presumptive tax, means 50% of my total receipt will be treated as income. But you have another option. If my income is less than 50%, then I can go for the tax audit on the 44AB, even if the income is not exceeding 1 crore, because tax audit is applicable exceeding certain amount. So in this particular case, tax audit is also not required. No reporting is required, but on this much of reporting they made. Changes due to amendment made by the Finance Act. What are the changes? Capital gain. Actually, a lot of changes have been made. Friends, you have seen the long-term capital gain and indexation facility. Actually, what happens under the provisions of capital gain, you have to compute the income and under different circumstances. So what are the now two important points are there? Date of transfer. So if the date, because of amendment made, actually there is an amendment made from 23rd July 2024. If any asset which are transferred after July 23rd 2024, so in that case, in case of long-term capital gain, the tax rate is 15% and no indexation is available. So if no indexation is available, then you are going to lose paying more tax. Accordingly, because it became mandatory. Previously, what happened, long-term capital gain was 20%. Now the long-term capital gain has come down. So when there is a transfer, so this is falling in the year 2024-25. Any transfer made prior to July 23rd, before July 23rd, 2024, 23rd July 2024, then old tax rate is applicable, old computational method is there, indexation is allowed, and if any date of transfer is after the 23rd July, 23rd July or onwards, then that case new tax rate is applicable. So if that is there, so before the July, what is the tax rate is applicable? 15% tax rate of short-term capital gain under 111A. 111A is related to the listed equity shares, unity equity oriented fund, and a unit of business trust. So they have to tax, that is 15% short-term capital gain. And one of the condition is that security transaction tax has been paid. 20% tax rate on long-term capital gain under 112, and 10% tax rate on long-term capital gain under 112A. 112A is the equity share. This is the prior to the July 23rd, but if it is after July 23rd, then the tax rate has been changed. So the rate of short-term capital gain covered under 111A will be 20% instead of 15%. So 11A already I told you, equity shares, equity oriented fund, and unit trust business. So in that case, it becomes 20%, 5% increase. Uniform tax rate 12% in any other asset, long-term asset. So that will be in place of 112 was the 20%, then it became the 12.5%. So you have the option 12.5% tax you have to pay. If you old method, you take indexation benefit and pay 20%. But practically, I'm talking 12.5% is become more than the previous rate. I'm talking about effective tax amount too. Effective means indexation you take pay 20%, which is maybe less than 12% without indexation, 12.5% without indexation. So that is actually once I made one exercise, I found that if the consideration is more than 800%, then the 12.5% tax is more. If it is within 800, 8 times, we can say consideration 8 times than the purchase value or consider acquisition value. So in that case, the old one is beneficial, means indexation benefit is beneficial. Then you coming to the tax rate of long-term capital gain covered under 112A will be 12.5% in rather than 10% because the amendment already made. So in case of your equity shares, so it become 12.5. So 12.5% they made a distinction, tangible and intangible. Land building and equity shares has been taken into same par for the purpose of computation. So that is the reporting is there. So that different tables has been provided. So one is the date of transfer. There is a separate reporting for the transfer of different assets. There is also separate table before transfer 23rd and onwards. So that has been given. So actually automatically the tax will be calculated when you are going to file the return. Capital gain of unlisted bond. Actually, there is a new section was introduced. So in that case, the market linked debentures and specified mutual funds under the special capital gain regime. So in that case, any gain arising from the transfer, redemption, or maturity of any unit of such a specified mutual fund or market linked debentures is treated as short-term capital gain. So there is no concept of long-term short-term capital gain here. Sorry, it is only short-term capital gain. So the scope was expanded. So in addition to the market-linked debenture and specified mutual funds, then the unlisted debentures and unlisted bonds also included in the scope of this section 50AA. So now since it is incorporated, so that's why a table has been provided to report of the entire gain, which is taxed as a short-term capital gain, regardless of the holding period. So there's two tables also available. One is before 23rd July, one is after 23rd July. Because the before 23rd July, it was long-term capital gain. Now it is short-term capital gain. With here different because this covered in this section. Then you are reporting of buyback proceedings as a dividend income. There is a change has been made when a domestic company brought back its own shares. It was required to pay additional tax under 115 QA on the income distributed. But practically what happens, and this amount is exempted in the hands of the individual. But from the 1st October 2024, it is treated as a income, deemed income in the hands of the individual, and it will be not taxed in the hands of the company. So that reporting has to be made. Purpose of calculation of capital gain, the consideration has been taken on this. Actually, this changes because dividend is reported in the other sources, and previously it was reported in the capital gain. Now it will be treated as in the other sources as a dividend income. ATIC, actually this table they omitted. The reason is because of the benefit is not available at present. So this table they have omitted from the ITR 6. I have given you in the specific ITR wise 80D and 80DD 80U. This may be applicable to most of the individuals. 80DD is applicable if the assessee is an individual HUF and having any of the members is a physical handicapped person within the meaning of the section, as defined in the section, and any expenditure incurred or any insurance premium paid for the disability person or disabled person. But 80 is the assessee himself is a disabled person and getting the deduction, sorry, claiming the deduction. So what is the difference? Now to get the benefit of 80 DD, suppose X, his son is a physical handicapped person. So to get the tax benefits, certain deductions, whatever is available, he is required to produce a certificate from a medical board, and that certificate should be in the form of a 10IA. And assessee must, now what happens? There are different types of disability has been defined. So only in case of disability, that is autism, cerebral palsy, multiple disabilities. Only these cases, if the disabled person is suffering, dependent disabled person is suffering, then 10IA form is required. But now what happens? The actual number of diseases are there. But now for all cases, they have to obtain a 10IA form. And once they obtain the 10IA form, the details of the form has to be reported in the, not only uploaded the form, but also they have to report in the prescribed format. Sorry, prescribed ITR 2 and 3. So the changes made is related to the obtaining certificate in the 10IA from a medical authority as prescribed under the Act, and not only for these 3-4 diseases, but also for all the diseases which has been covered in the 80TT or 80U, and that has to be the acknowledgement has to be obtained, and the reference number etc. has to be produced. And then pass-through income under section 115U. These are sections actually many of the individuals may not be coming, but particularly I am talking those who are filing the ITR 5, 6, 7. So they mostly cover under this. This is section 115U mostly is related to the venture capital fund or venture capital undertaking. And in that case, if any, they have a fund which are covered under definition of investment fund, but it is a category of 1 or 2 of alternate investment fund. If you can go through all the details of the 115U. So in that case, a trust can have a business income. A trust is having other than business income. Suppose a venture capital fund or venture capital undertaking has two types of more than one income. One is business income, one is other than business income. Maybe interest income, maybe dividend income, etc. So in that case, what happens? Actually, what happens? The whatever income is there, it should be taxable in the hands of venture capital fund or venture capital undertaking. But in this particular section, if it is other than business income, then that income can be transferred to the members. And if it will be transferred to the members, then what will happen? The venture capital, it will not be taxable in the hands of the venture capital. So now what happens? Whatever transfer has been made, there was no reference was given in the pass-through income. That is a table is there. It is not there. Now what happens? It is made mandatory to give you all the details in that table, so that it will be reported. And audit disclosure has to be given. Schedule 5A of the ITR 3 pertaining to appropriation of income between these. Actually, this clause is not applicable in most of the persons I have seen. There is a if any income between there is a sharing of income between the assessee and those who are governed by the Portuguese civil code. So that was there, and that has to be reported. But many cases it was not reported. There was no such opportunity of reporting. Now Schedule 5A in the new ITR has expanded the scope and to disclose whether the spouse account are audited under any of the provisions of ITA, excluding 92E. 92 is the transfer pricing provisions or any other applicable. So practical, this section is not applicable to most of you, I think. Then there is a EAL is applicable if the total income exceeds 1. Reporting of asset liability is very important. Previously, it was 50 lakhs. So if you are an individual or if you are a HUF having income uh, more than one more than 50 lakhs, then you are required to report your assets and liabilities. Now it is increased to 1 crore. So if X is an individual or X and others are HUF in both cases, or they are having the business in also, and it does not talk about the business, it talks about the income. So any assessee who is filing return item 2 or filing return item 3, item 2 is filed by the individual and HUF, item 3 is filed by the individual HUF who is having the business income, and 2 is other than business income, but their income is exceeding 1 crore. So there is a table provided where all the details of asset liability you have provided. All the asset means land, building, gold, cash balance, fixed deposits, everything. At the same time, the liability also to be shown. Just like you are a business assessee, even if you are filing 2, you have to also show it. That is there. TDS requires disclosure. Previously, section wise, there is a TDS table in all return you might have seen, but that was section wise disclosure was not there. Now there is a section wise disclosure has to be made in the TDS table. And reporting a profit from eligible business selling raw diamonds, that is a safe harbor clause is applicable. Hence, these changes is not a normal change. Actually, it is applicable to any specific assessing. CBDT introduced 3 safe harbor rules. Safe harbor rule, one has to understand. Actually, if you are going for uh, making any or allowing a taxpayer to declare transfer pricing, when there is a transfer pricing provision is applicable, so definitely there is a agreement made between 2 persons, so that required to be approval of the government or it has to be intimated. But if any transfer pricing provision is applicable, but the margin is within the limit, so the transfer pricing, the limit is there. So in that case, there is no requirement of getting the approval. So that has been reported here. I think 4% or something they are keeping as the difference, and that has to be reported. So these are the few changes made, but applicability of the ITR form changes has been made more. And in addition to that, there are few forms also required to be kept, and that is one is 12BB, one is a TDS certificate, and 67, that is a statement of income from non-specified country. Prabhas, ମୁଁ ଯାଉଛି after 10 minutes I am reaching. 10 webinar ଅଛି, after 10 minutes I am going. So 26 AISA, there is no changes are there, but that information has to be taken for the purpose of reporting the ITR. That is very important. You have to make a reconciliation. Any item which has appeared in the 26 ASA or annual information statement, whether it is auto-populated in the income tax return or not. To my understanding, most of the cases are auto-populated. Friends, one of the very important point you have to keep in mind, you find many cases specified transactions because of a wrong reporting has been report filing by the different authorities has been captured in your AIS or ASA. I have seen when the bank was filing the return of details of a fixed deposit exceeding 10 lakhs, many of the fixed deposits also reported in the other's name, maybe due to the wrong PAN coding. Similarly, we have seen in the immovable property cases, there is also wrong reporting has been made, and the transaction has been reported in the other's number or others name. So when why I'm talking about, the moment you have to see it before filing the return, immediately you just take up the matter with the different authorities who has filed this return to make the amendments. Otherwise, what will happen? Already I told you, basis of your information available in the return, one can go for the exercising the, so the department can go for the different scrutiny. So it may be many cases already you should know it. Individual cases, as I remember, when the faceless assessment was introduced, it was only 0.35 to 0.45 of the person's income was assessed. Everybody's income was processed. But now, to an understanding, it has increased. So because of automation, because of the digitization, the the assessment is taken up. But again, I'm talking it may be 5 to 6%. Still, it is around 90% of the person's assessment is not taken place, but scrutiny has been taken place. So the scrutiny is made based upon these informations. So suppose X is an assessee in whose name 30 lakhs PWD was put by the bank. It was appeared in the AIS or the ASA, and the CBTT has taken a decision in the risk management strategy. They have decided that any account where the PWD exceeding 15 lakhs or 20 lakhs will be going for the scrutiny. So what a notice will come to you. And the reason is when you have 20 lakhs or 30 lakhs is appearing in the fee deposit as a new fee deposit, but your income is not there to that extent. So where you got it? So notices are issuing like this. So you should be very careful with these information sources. So these are the few changes has been made. And quickly I will go to see your any question has been asked. I will try to answer it. Sharing is paused. Okay, ठीक है, sharing is not required. But I think no question answer perhaps is not showing. Is not showing. So these are the few points which I discussed. Just I think good afternoon. This slide also I will share to the everybody. Mr. Kanoi from Guwahati. Thank you. There is a new income tax bill where you are this. Okay, okay. Thank you. I had been to Guwahati chapter. Thank you very much, Mr. Kanoi. I think no such questions are there. I am not able to listen. Actually, I think one of our friend has written that he is not able to listen. But my to my understanding, maybe your internet problem because my internet is working very perfectly. But I will send this slide PPT to TRD. TRD perhaps will send to you or upload it. When online form will be released, sir. Online form already released. It is available. But actually, there may be some issue. What I came to understand that the configuration etc. may not properly working also. It is showing that you fill up the there is update for okay. You for a new taxpayer, first timer. I could not understand it. Mr. Parthasan, thank you very much for the good words. Actually, there is a window has been opened for the ITR 1 for a few certain capital gains, small profit. It is given, it is open, but I could not open the ITR 1 perfectly. So you just check up it. Auto population of data will be there while finding. Auto population is must because if you give option for the auto population, it will be auto populated. If you will not give the option, it will not auto populate. Better to do auto population because before filing, it will ask you. Today PPT I will send to TRD. If any specific request made to me, then I will link to that WhatsApp. Sir, you give the your email ID to the WhatsApp I am giving, WhatsApp number I am giving. This is Akhilesh Kuchar, thank you very much. Good wishes. Mr. Singh, Jogendra Singh, I'm just going to give you the Priyanka, just I'm answering some questions. Hmm. हाँ, ठीक है मेरा तो ठीक है जस्ट सर गेसेंगे हाँ every year new certificate to obtain is no not necessary ATU new certificate in all that is a very specific provision is there you can go through provision as a remember the certificate is valid for certain year actually the doctor will give certificate so in that format it is there as I remember just to check up it the certificate which is given for physical handicap dependent physical handicapped or physical handicapped there it live, whether it is permanent disability or the disability for certain period. So I think permanent disability means that no certificate is required. That is one column is was there. Just check up is it NIA form. ITR form already I told you ITR form is not active. The reason is they are why they 1 point I'm clarifying it. Why government extended the date of filing from 31st July to the 15th September. The reason is the ITR form they notified, but the ITR form has to be synchronized in the portal. So that work has perhaps not completed. That's why it is not coming. It is showing that you filed the return, but if you are going to file the return, but it is not accepting, capturing. A company can opt out for new tax regime or old tax regime. That is no, it is for everybody. In the recent years, income tax rate on corporate have been slashed. No such relief to partnership firms. That is the issue. Please, is okay. PPT, nice. Thank you very much. I am giving one just in the chart. I am giving my number. You can WhatsApp me. I will send the PPT. That is 9437190060. This is my WhatsApp number. In this number you can give or in the mail you can give.
Thank you so much, sir, for your expertise and knowledge, and to all the participants for joining today.
Thank you. Thank you. I'm
I hope,
leaving. Okay.
thank you, sir. I hope
Thank
you
you.
found today's webinar valuable.
Okay. 227 attendance per attendees. Thank you very much, everybody. If you have any specific query, you can just I tried my best to highlight some of the points which are coming to my mind. And we are also running short. I have to go also. So thank you very much. And I have given my email ID and the number. If anybody has any issue, you can also WhatsApp me or send me. Thank you very much.
Thank you, sir. Thank you, Priyanka, ma'am.
I'm leaving.
Okay, sir.
जी सर। जी सर, सबको रखा। अच्छा ठीक है। अरे कुछ भी कुछ भी। एनीवेज, थैंक यू सो मच सर, थैंक यू। मिल गया। हाँ, थैंक यू सो मच। हाँ, फिर से साइन करके भेजिए और मुकुलिका दी को भेजिए। फीस 40 रहेगी। मुकुलिका बोलने से भी चलेगा। ठीक है सर, थैंक यू। बहुत खराब हो गया। बहुत कड़ा हो गया। हाँ, बहुत बढ़िया बना है। बिस्कुट खिलाइए तो। कहाँ हो गया कोई ना, इतना नहीं सोचते। पत्ती ज्यादा चलाएंगे तो दूध उबाल के चक्कर में ना, इसलिए ज्यादा चलाएंगे। खत्म हो गया मेरे पास। ये वाला है, ये वाला मुझे अच्छा नहीं लगा। ये वाला खत्म हो गया। इसके लेंगे नहीं। না, সুগন্ধি লিখে দেখে গেছে, ডাউনলোড হচ্ছে। हाँ मैम बोलिए। ओ अच्छा, होल्ड कर। हाँ मैम, ज्वाइन किए ना आप?
हाँ जी, ज्वाइन कर।
तो अभी क्या है कि हेलो, हम दिखाई नहीं दे रहे आपको। हाँ, अगर ये देखिए आपका एक ऊपर दिख रहा है ना कि आप एक कोई भी पीपीटी खोल लीजिए, कोई भी फाइल खोल लीजिए आपके डेस्कटॉप में, उसको शेयर करें। हाँ, ये भी चलेगा।
एक मिनट, फाइल खोल रही हूँ।
ठीक है, फिर से शेयर कीजिए। बंद हो गया है। हाँ हाँ हाँ, ठीक है, इसको कर लो। पता है ना।
याच्यावर व्यवस्था करू.
नॉलेज बघू। हाँ हाँ, खोले मैडम।
ये विंडो ही शेयर हो गई है। फाइल नहीं हो रही कोई शेयर। अब आ रहा है?
अभी जैसे कि आप होल्ड ऑन, अगर हम आपका फोटो क्लिक करते हैं तो सिर्फ आपका फोटो आएगा। ठीक है। ये भी कहूंगी यार,
तीन कम है ना, नहीं क्या
ना छोड़ दीजिए।
हम तो मिला नहीं हुआ थोड़ा सा. उनको लगा खड़ा हो गया तो थोड़ा तीन होगा तो कवर होगा इसलिए.
ये वाला एक सेकंड मैडम। जी सर।
डायरेक्टर डॉट टेक्निकल और टेक्निकल डॉट डायरेक्टर, उनका वो भी है पर वो दोनों ही देखते हैं। टेक्निकल डॉट डायरेक्टर, आ रहा है ना आपके पास, आना चाहिए। जी 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 जी, थैंक यू सो मच। जी मैडम, हाँ तो उसमें देखिए एक है फुल स्क्रीन, एक है स्क्रीन विच इज डिवाइडेड। स्क्रीन विच इज डिवाइडेड है ना, उसमें आपको पिक्चर इन पिक्चर कॉन्सेप्ट दिखेगा। मतलब एक साइड में आपको पीपीटी भी दिखेगी, दूसरे साइड में चेहरा भी दिखेगा फैकल्टी का। हाँ हाँ हाँ, ठीक है ना। हेलो, सॉरी, यस सर।
भावना इधर आइए।